Good morning. It is Saturday, January 18th. Hope everyone had a good week. This is a 15-minute chart in front of me. And Thursday, I had the 1, 2, 3 up. And then I said we're getting ready to maybe look for a pullback to a wave 4 area. But I do want to point out where the market did make a higher high above this 3. And look where it pivoted at. I had this line on the previous video set there, and it's 13. It's basically 0.13 higher than this wave 3. It's a 1.13. I know it says negative there, but if you ignore that, it's just 13. I guess 13% above this. And that wave is to catch these type of waves, a higher high, maybe a false high, or maybe a fake out above a previous high, and the market likes to turn either at the if it is going to do that at the 13 or at the 27, 1.27, kind of a harmonic wave, one of those sacred maths that I've picked up along my trading journey. I just think it's very interesting that it hit it almost exactly and pivoted, just like a lot of these numbers I've been pointing out to everyone. I hope everyone's been paying attention. So now I have 1, 2, and maybe we're done with a 3. I haven't really broke down these minor waves. It's been really choppy, kind of hard to even count, to be truthful. But we got maybe a 1, 2, 3, 4, 5, A, B, C. I could really do it. This is some kind of correction. Not sure if we're done. All I know is we're doing this 3, and not sure if we're complete yet. I'll really hone in, and what I'm really interested in is when we're done with this 3 and we start pulling back for a wave 4, which will be likes to trace at the 38%, as I mentioned. So we'll keep an eye on this count right here. In front of me is that weekly chart we've been following. And if we are finishing, well, we're not quite done with this 3, as because I just mentioned we're looking for a 4 and then another push up to maybe complete the 3. We're not even done with this big 3 on the weekly. So that means after this 3 is done, we're going to be looking for a big 4. A big 4, which will probably come down in this previous 4. As I mentioned, that's the target for a bigger 4, likes to come down to previous 4s. Which I'm going to move this because 1, 2, 3, 4. I'll leave it here for now. But this looks like a 4, a final wave before our final push, and then we should get a larger, longer big wave 4. This was a wave 2. It lasted 1, 2, 3 weeks. So maybe 6-week sideways action for a wave 4, and then a push up to finish to complete a wave 3. So that's a weekly chart. So we got more action up in the long term. In the short term, we might go sideways to down. Remains to be seen. Here's a monthly chart. We got a 1, 2. We're still making a 3. We need a big 4, a monthly big 4, and then a final push up for a big 5. I do want to highlight how great this bull market has been. It's just been amazing. Look at this recession here. 08, 09. It did. I got 5 waves down. 1, 2, 3, 4, 5. But look how small it is in comparison to where we are. It makes it look little. And I remember the tragedy of that recession, the scariness of the recession. I know everyone does too. But look how small it looks. I want to highlight this. This is amazing to me. if we take the recession from top to bottom, there's the recession from top to bottom. I move it over here to where we currently are. It only drops us right back into the previous four, which it's going to do anyways sooner or later, and then probably bounce around here, and then we'll work our way down on this monthly chart. Once this big five is done, I'm projecting we come in here just like that. That's a recession distance. Amazing. And then we'll go down maybe to this four, maybe to this two. That's long-term projection. For now, we're going up. We're looking for a wave four. And finally, in front of me is a 5-minute chart of Friday's action. I do want to highlight maybe one or two things that I find very interesting and a good technique when trading. So why couldn't the bulls get above here? Why was it so strong? Why was it so difficult for them to break above? We tried 1, 2, 3, 4, 5 attempts to break above the daily high. Well, for one reason, if we look at the daily chart, look where the daily chart is. It's way above here after this big move up here, this acceleration. Look at these two gaps. We got, that's an exhaustion gap. People are going to start taking profits. I told you if you buy above anything, it's very cautious. If you sell below anything, you got to be very cautious. Here's a sell below. And then we didn't go very far. The next day we bought. So same concept. If we're selling above, we got to be cautious. Obviously, they sold and took profits. It's called distribution. Right at the bottom is accumulation. The top distribution, and we could see it on the 5-minute chart. The distributing of shares, the profits taking, the firms just taking profits on every push high, no matter how strong the attack looks from the bulls. So the first bar of the day was a big down red bar. That should tell the bulls it's gonna be hard to maybe break that. They already kind of showed their hand, what they're trying to do here. Over here on the left, the bulls, we should already think trading range here, because this back, this down, this up, this down, this up, it's not going to be a bull trend. But look how strong this attack was above here, and then just repelled all the way back down, and then you get this climactic, maybe an exhaustion bar. No follow through the next few bars. If you're a bear, you got to be ready, because people could think this is a pullback and the work to the downside is done. Now we're going to look up, and obviously people did get spooked. And then even here, the bulls, this sideways action, got on top of this moving average. I want to highlight right here. This box is the distance, the longest distance that price got underneath the moving average right here. So if you're looking to maybe buy or cover shorts, you want to look underneath the furthest it's been so far today. And if you look at that, look at that. The market likes symmetry. Scary down if you happen to be holding long, and then all of a sudden you get a break, recovery underneath the same distance, underneath that moving average. Now, if price closed below that distance, if it didn't halt at the same distance of here, the odds probably would start increasing that we're going down, because it's going down further than it has over here. But I just like to highlight, it's almost the exact same distance underneath the moving average. Have a good day.